Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so we're going to talk about an article that just came out, 7 economists and real estate pros on what to expect in the housing market this spring. Now, it's kind of already spring. It's March.
Right.
So it's it's pretty obvious what's going on in the housing market. But there is some stuff that they talk about that actually is for the whole year.
Okay.
They're sort of predicting what they think is going to happen for the whole year.
And some of it is in agreement with what we've been saying.
It's literally all of these economists watched this and they just copied us. They just said all the stuff we've been saying for like a year. But anyway, if you watched yesterday's video, Silicon Valley Bank got a bailout, sort of a bailout. The Fed just said, hey, we're going to cover all the deposits.
Right, which is what we were talking about yesterday, that's what's happened in the past, with Washington Mutual, with the First National Bank of Nevada and other banks like that, where the FDIC came in and said, okay, we're going to make it all good. And then they ended up selling the assets to another bank. So it'll be interesting to see who picks up the pieces from Silicon Valley Bank.
Right, yeah. And they do have positive assets. They have more assets than they have liabilities. So there is money in there. So, okay. All right. So let's talk about these predictions. So the first one is mortgage predictions. What they said in here, I'll put the screen up. Prediction 1, mortgage rates are a wild card. Buyers have been sitting on the sidelines, were likely encouraged by mortgage rates that fell from higher than 7% in November to just about 6% in February. But they've gone up since then. One of the things it mentioned in the article was the senior economist at NAR expects they will be below 6% by the end of the year.
It's possible. It's possible.
We don't know. Anything's possible. If the economy tanks, it's more likely.
Yes. So, it's interesting as far as the economy is concerned. Unemployment numbers came out last week. We went from 3.4% to 3.6%. Not a huge jump.
But we created 311,000 new jobs.
Right. We created lots of jobs. But it's still a concern to Chairman Powell, and he will continue to raise rates, at least in the short term.
Right, because the economy is still pretty hot.
Yeah.
Okay. So mortgage rates, who knows? We're going to do a whole video on this, but this idea that mortgage rates 100% are tied to home prices, and as mortgage rates go up, home prices fall, that's never happened. Matter of fact, the last 4 major times home prices or mortgage rates went up, home prices went up.
Right.
Last 4 times, okay? And we're talking like 18%. Using that logic, home prices should have been like cut in a third, and they weren't, okay? And then the housing crash, home mortgage rates are falling the whole time.
Right.
Home prices should have gone up, and they weren't, okay? All right, second prediction. Prices will remain relatively stable.
Right, and we've been talking about this for months. We said that this was going to be a no-drama year as far as prices, which means they're going to go up a little bit, down a little bit, but not do anything dramatic.
One of the things driving this is inventory, and it's going to be market specific.
It is. So, it's really interesting because we do still have markets that are seeing appreciation. For example, Florida. There are several markets in Florida that are seeing appreciation. There are other markets on the East Coast that are seeing appreciation. But by and large, most of the nation is kind of not doing a whole lot.
We're seeing the normal spring bump.
Right.
Because we just did the condo update, and then we did the other one, and prices are going up. List prices have been going up for weeks. Median sales price is starting to rise a little bit. By April, you'll definitely be able to see it.
Right.
Okay.
But again, this is just the springtime bump. This is not something that we're expecting to continue throughout the year.
Okay. Prediction 3, more people looking to buy.
Okay, so this is an easy one, and we've done a video on this that was like 34 million people were looking to buy this year.
37 million.
Okay, and we've got maybe 4 million houses that are going to turn this year. So a lot of people will be disappointed.
And maybe not. Remember, when people are like, the housing market's doing really badly, the housing market's not doing badly. The problem is there's not enough inventory. If there was a normal supply of inventory, home prices would probably have declined more, and would probably decline this year too. But there's this wild card thing that got thrown in there, which is inventory so low. So people are sort of, stuck. because they're like, oh, if I have to buy, I have to pick from one of the 3 houses on the market.
Right. And then the other thing is, as far as wildcards are concerned, this thing with Silicon Valley Bank, I understand that it's just one bank, but there is this concern amongst people far smarter than we are that there could
3 people.
that there could be a contagion effect, and we've talked about this too, that there could be a contagion effect, that other banks may be affected, and I think people are looking at that, and there will be people who maybe were sitting on the sidelines before, and now they're thinking, you know what, I'm going to take that cash and I'm going to put a tangible asset like real estate to kind of hedge my bet against both inflation and what's happening in the banking sector.
Okay, prediction for housing inventory will remain an issue. I'll read this because reading it's better than I can sum it up. A large number of homeowners refinanced in the last couple of years historically low interest rates. The last couple of years means like 2019, 2020, and part of 2021. Okay, giving that up and trading it in for one that's a hair away from 7% means that people are choosing to stay unless they absolutely have to. Homeowners are literally sheltering in place. So what's the normal dynamic when people buy and sell? Like, how does that work normally?
So normally what's happening is we have what's called a move-up buyer, which means they're going to sell this house and they're going to buy another house, either that it's bigger or it's in a different location or whatever. So they're trading one for one. But in an environment where they've got a 3% mortgage and they're looking at a 6% mortgage, now it's making less sense. So like Todd said, unless there's some life event that's causing people to have to sell, people are for the moment just kind of staying put, hanging on to their 3% mortgage and trying to figure it all out. They also don't have the incentive of something better to purchase because, like we've talked about, there's very little inventory, so there are very few houses from which to choose. So the likelihood of that perfect house coming along is not that great.
If they do, it's going to be a cash for cash. They're going to sell a house cash. They're going to sell a house probably to a cash buyer, and they're going to take their cash and go buy a house cash.
Right.
And that's a threat. That's bad for the industry. It's bad for real estate agents because we make money doing more transactions, and there's certainly going to be less transactions this year. That's bad for consumers because consumers are trying to get away from being a tenant maybe and buy and lock in some payment, even if it's not a super low payment, and then later refi it to a more reasonable rate because if you're renting, you're just throwing this money away. So this is kind of a big issue that the only way to fix it is to get more liquidity in the housing market. And so you have to have new home builders, but home builders just went 11 months in a row building less and less homes. So it's not like, and the people have said, oh no, Todd, there's literally trillions of houses that the home builders have built that they're waiting to dump onto the market. Every single house they built has either been sold or is already in the MLS. Because home builders don't finish a house and go, well, now what? It's done. What do we do with it? They usually have it in the MLS before it's done with construction.
Okay, so you kind of have to understand what home builders are also doing. We've got a transaction right now where the home builder is saying, hey, we're not even going to break ground on this house that you want to buy until your loan is approved with our lender. So home builders are still really very cautious. They are concerned about interest rates. They're concerned about buyers qualifying. So they won't even break ground on a house unless the buyer that wants that lot and wants the house on that lot is qualified for the loan.
Here's prediction number 5. Buyers will snap up second homes. Housing remains a primary investment for the world's most affluent citizens and a safe hedge against inflation. Okay. This is, if you look at all 5 of these things, they didn't really exist 4 or 5 years ago. 4 or 5 years ago, a substantially quick change in interest rates likely would have resulted in substantial softness in the market, falling prices over a couple of years, right? I think with people that, I look back and I think about the housing crashers, they're not really wrong. They're just at the wrong time. If this had happened 5 years ago, they probably would have been right. But It didn't. It happened when a bunch of stuff changed. So none of them changed their thinking of how the market works and how things work. So you've got all these things. You've got low inventory. You've got people who can't move. You've got affluent people who are trying to buy a second home, which is going to be an investment home, or they're going to own 2 homes and live in, because we know a lot of people like this. They own 2 homes, but they go back and forth. They spend half their time at one, half the time at the other. And then maybe they Airbnb it out part of the time, or it just sits vacant. But they're trying to hedge inflation. They've got all these assets, and they've decided, hey, I'm just sitting it all in the stock market that's potentially overvalued and volatile. I'd rather just park cash in real estate.
Right.
And I think that's why this whole affordability thing hasn't affected home prices the way people have said. Well, Todd, if interest rates are double, shouldn't home prices fall because home values are strictly based on the payment? And no, they're not based on the payment, because if you buy cash, you don't have the payment.
Right.
And if that's the case, home prices could double or triple, because if everyone's just coming in with cash, the cash has to go somewhere. People will be able to set whatever rate they want, which is why home prices are going up right now, despite interest rates being more than double what they were 2 years ago.
Right.
They're literally going up again.
They are. Springtime, like we said, they're probably not going to keep doing that throughout the year, but certainly this spring they will.
They probably will, and they'll probably drop again in the fall like they do every year.
Yep.
The per square foot amount drops. And sometimes this happens where they rise and fall, but the rise is more than the fall, which is what happened this year. One of the things that was also in the article was that, I think I have it on one of the screens here, was that prices have fallen from the peak, but are still up about 6% year over year nationwide. So nationwide home prices are up year over year, March to March. They've fallen certainly from the peak, because at the peak they were up 22% from the previous year.
Right.
They're up substantially from the previous year. So that's I don't disagree with anything in here, but I will say we've been talking about all of this for at least a year.
Right.
Like there's not one thing in here we didn't say a year ago. Right.
So what do you think? What do you think is going to happen this year? We're already a quarter of the year through it already. What do you think is going to happen? What's happening in your market? Let us know. Please leave us comments. If this was interesting to you, if this was confirmation bias for you, whatever it was, please like the video, subscribe, hit the notification bell, share the video, leave us a note, and we'll see you on the next video. Bye.
Bye.